Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment, we have Bo Bai, chairman of MetaComp, to discuss the accelerating next wave of digital asset adoption. Bo, it's great to have you with us. Welcome to TradeTalks.
Thank you so much for having me.
You got it. Let's talk about Bitcoin for a moment here.
Sure.
Hitting an 18-month high, it appears to be showing signs of recovery. What do you think is driving that?
Well, I think we will know the halving next year, as well as the increasing penetration of the institutional investors on potential ETF are really making a big drive of the running of this. And at the same time, you can also see, because of the supply side, the constraints on power and on sustainability movements, on many of other stuff that is creating much more limited supply, and then coupled with the prospective far higher demand that is driving up the price substantially.
Let's talk about the tokenization of real world assets, and that's really been driven by institutions. What are some of the trends that you're seeing there, and what's your outlook for 2024?
Right, I think in 2023, you really begin to see a lot of tokenization of the financial instruments, be it a bond, be it LP interest, and so on and so forth. And then the trends is also increasing large institutional investors are coming into the place to try to create that. And at the same time, what we see going forward over the next year and the next couple of years is going to be exciting tokenization of real-world infrastructure assets. We are doing a lot of groundwork in order to tokenize, such as solar panels, wind projects, batteries, moving battery stuffs, and so forth. Why it's so important? Because this world, the infrastructure assets are more and more digitalized, and then more and more green. And then a sophisticated digital assets coupled with the right technology. We have a patent technology called non-fungible digital twin that is combining the digital twin technology and the blockchain NFT technology to create a unique representation of the real world assets.
Right.
And then based on that, you tokenize, create the security for those assets. So we are increasing to see more and more this tokenization, not only of financial instruments, but increasingly possible of real world assets that are increasingly digitalized and sustainable.
Would you almost think of that as a derivative of the underlying, in a way, like a tokenization?
Very much so.
Right, right.
The way to think about that is, in the old traditional financial industry, we have ABS, asset-backed securities, is sort of a derivative on that. But in the new world, we're essentially going to have a digital representation of that asset, which we call non-fungible digital twin, to represent that. And the token is replaced the security. So you almost have an ABS, asset-backed security market, moving to avatar-backed token market, and then that is a semi-derivative, and then but more really is more like the ABS and the risk market.
Let's talk about FI-backed exchanges for a moment. The recent launch of EDX markets over the summer. Are crypto-native exchanges in the risk of getting replaced? How do you see this evolving?
I think it's a very positive trend, because the more traditional financial institutional-backed marketplaces and exchanges are frankly better positioned to do all the KYC, AML, and then all those efforts, and then to also bring the financial institution from the traditional industry into this market. The way that I see this is it really adds to additional layer, additional investor pool into this ever-growing industry. So I think it's going to make the pie much bigger. The crypto-native exchanges, the major ones, and I think they all have to migrate toward this direction a little bit more as well, particularly focusing on all the efforts on compliance, on regulation, on the compliance, on KYC, AML, and so forth. So there is going to be space for everybody, and I think we're going to see more and more this interaction, intersection, and intercollaboration with the crypto-native exchanges and the TradeFi institutional-backed exchanges.
Let's talk about regulation for a moment here. It feels as if it's kind of stagnant. What are some of the proactive measures that you're seeing in terms of self-regulation?
In terms of self-regulation efforts, I think for us, firms such as MetaComp, we're trying to be the metaverse compass, because we focus so much on compliance and AML and then CTF and so forth. The proactive efforts we can do and stay ahead of the curve is KYC. Blockchain is a tool. Blockchain can be used for many different purposes, and we have found blockchain plus AI is fascinating for AML and KYC. How so? For a regulated financial institution, we know the wallet address of our clients. So that is a known address. by working with many of the service providers, we know hundreds and thousands and millions of wallets out there are bad wallets that are marketed by CIA, FBI, DOJ, and Interpol, and so forth. Now, different from the traditional industry where you want to identify the money laundering efforts, and then particularly cross-institution and then cross-border was so hard. This is why there was such a big case in Singapore early this year. But on the blockchain side, as you know, all transactions are transparent. You just don't know who they are, but the transactions are all there, all the history. So we think the KYC can move, AML can move from following the money trail type of old fiat-based type of efforts to a relationship topography identification. Our clients, our wallet, known wallet, and the many bad wallets out there use blockchain, use AI tool, trying to find the relationship. And then it's actually very powerful based on our initial efforts. So all the institutions, and then to stay ahead of curve, I think should spend a lot of time, a lot of efforts on the AML, on the KYC, because that is needed in order for this ecosystem to be able to grow healthily, and then to have more traditional financial institutions to come in with us.
All right, Bo, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Singapore. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you with us again. Thank you.